Before the world ever associated his name with billions or brilliance, Warren Buffett was simply a curious boy from Omaha who loved numbers more than noise. His rise was not explosive. It was not glamorous. It was deliberate. The story of Buffett is not one of meteoric rise through risk or flash, but a steady climb built on deeply held principles, a relentless commitment to logic, and almost monastic patience that set him apart from a financial world addicted to speed. Today, Warren Buffett stands at the apex of a financial empire. Berkshire Hathaway, the holding company he transformed from a struggling textile firm into a multinational powerhouse, is valued at over $860 billion. Its reach spans nearly every sector: insurance, railroads, food, energy, technology, and more. And yet, even as his personal fortune surpassed $130 billion, Buffett's true treasure has never been the zeros in his net worth. His real fortune is the legacy of how he earned it. His life became a blueprint for rational decision-making. It is a life that teaches us that value isn't found in shortcuts or noise, but in clarity, patience, and the power of compounding, both of money and of wisdom. He showed the world that financial success doesn't have to come at the expense of integrity, humility, or humanity. But to understand this legacy fully, we must start at the beginning. Born in 1930, in the shadows of the Great Depression, Buffett was the second of 3 children to Howard and Layla Buffett. His father was a stockbroker and later a congressman, exposing young Warren to financial concepts early. But his curiosity wasn't limited to dinner table conversation. It was practical and profit-driven from the very start. At age 6, he bought packs of chewing gum and Coca-Cola to resell at a margin. By 11, he had purchased his first shares of stock. That first trade, City Service Preferred at $38, taught him a lesson he would carry for life. When the stock dropped to $27, he panicked and sold at $40. It later rose to over $200. From that one experience, Buffett learned what most investors never fully absorb. The enemy of successful investing is emotion. The foundation of his career would be built on resisting the emotional triggers that drive most financial behavior: fear, greed, impatience. Despite his early ambition and aptitude, Buffett's path wasn't without detours. He was rejected by Harvard Business School, a fact he recounts with humor today. That rejection led him to Columbia, where he studied under Benjamin Graham, author of The Intelligent Investor, and the man who would fundamentally reshape Buffett's thinking. Graham introduced him to the concept of intrinsic value, the idea that a stock's true worth lies not in its price, but in the actual business behind it. Even with this new framework, Buffett didn't transform overnight. Early in his career, he was still drawn to cheap stocks, so-called cigar butts, companies that had one puff left before fading away. He bought fair businesses at wonderful prices. But over time, with the influence of his partner Charlie Munger, he shifted his thinking. It was better to buy wonderful businesses at fair prices. This evolution in strategy would prove crucial. His disciplined focus and refusal to follow market fads would become a hallmark of his investing style. While others were caught up in bubbles, from the dot-com mania to the cryptocurrency craze, Buffett stayed grounded. His most famous investments were rarely flashy: Coca-Cola, American Express, Geico. These were businesses with consistent cash flows, trusted brands, and durable competitive advantages. He didn't chase excitement. He chased certainty. 1. Think in decades, not days. Buffett's investment philosophy can be summed up in one word: duration. While the world's investors move with the rhythm of quarterly earnings reports and breaking headlines, Buffett invests with a generational mindset. He famously said, "Our favorite holding period is forever." This wasn't a slogan. It was a strategy. When Buffett acquired a $1 billion stake in Coca-Cola in 1988, the company was already a global icon. But Buffett wasn't interested in what it would be worth next quarter. He was focused on what it would deliver in the next 30 years. Today, dividends alone have returned more than the original investment, and the stock itself has appreciated many times over. To Buffett, time is not a threat to wealth. It is its ally. His approach wasn't about constant movement or endless transactions. It was about allowing the power of compounding to do its silent work. That's why he often avoided hype. During the dot-com boom, Buffett was mocked for not investing in internet startups. Yet when the bubble burst, Berkshire stood untouched, its foundation solid, its assets real. Buffett's genius was not in predicting the future, but in preparing for it. He understood that the real returns come not from the thrill of a brilliant bet, but from the consistent discipline of small, right decisions compounded over time. In an age where speed is worshipped, Buffett's greatest asset was patience. 2. Wait for the perfect pitch. Buffett once said, "You don't have to swing at every pitch." It was one of his favorite metaphors, taken from baseball, and one that revealed a fundamental truth about investing. The greatest advantage is the ability to wait. Most investors feel pressure to act. They chase trends, jump into trades, and fear missing out. Buffett did the opposite. He waited, sometimes for years. He would study a company meticulously and only move when the odds were overwhelmingly in his favor. This self-discipline set him apart in a world obsessed with hustle. He had no shame in passing up thousands of opportunities that didn't meet his criteria. If he didn't understand the business model, he walked away. If he doubted the management's integrity, he passed. If the valuation didn't make sense, he waited. His avoidance of the airline industry for decades was no accident. It was a result of deep scars from previous mistakes. Even when he finally invested in airlines, it was with caution, and he exited before COVID-19 wreaked havoc on the sector. That wasn't luck. It was foresight, patience, and humility. He didn't see restraint as weakness. He saw it as wisdom. Buffett knew that saying no was often more profitable than chasing yes. 3. Buy businesses, not tickers. To Buffett, investing was never about symbols or screens or charts. It was about businesses, real companies with real people solving real problems. Every stock he bought was a piece of ownership in a living, breathing organization. That subtle mindset shift changes everything. When he invested in American Express, he wasn't betting on short-term news cycles. He was investing in brand power, customer trust, and the ability to withstand economic cycles. When he bought Geico, he wasn't thinking about next quarter's results. He was evaluating the company's cost advantages and management ethics. He constantly asked, "Would I want to own this business if the stock market shut down for 10 years? That question alone reveals the depth of his commitment to quality over flash. In doing so, Buffett removed himself from the emotional roller coaster of the market. He wasn't reacting to noise. He was investing in conviction. Yellow Circle, have you ever made a decision in your life that paid off only years later? Share that story in the comments. It might just inspire someone else. And if you're enjoying this video, give it a like and share it with someone who needs a dose of long-term thinking. In the world of investing, numbers often steal the spotlight. But for Warren Buffett, reputation has always been more valuable than any balance sheet. He didn't just protect his image. He cultivated a deep-rooted culture of integrity that permeated every level of Berkshire Hathaway. His now famous line captures it best. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Buffett understood that trust is not a commodity. It's a currency. And unlike money, trust doesn't inflate with more printing. It grows only through consistent action. That's why his approach to corporate governance was refreshingly simple. He didn't micromanage his managers or dictate policy. Instead, he chose people he trusted and gave them the autonomy to lead, with the expectation that they would act with the same level of honesty and accountability that he did. When Berkshire Hathaway acquired a company, Buffett often retained the original leadership. He kept contracts minimal and avoided legal entanglements. Why? Because if he couldn't trust someone's word, he didn't want them in the business, no matter how attractive the deal looked on paper. His quiet insistence on integrity drew high-quality partners and built a reputation for fairness and consistency that remains unmatched in corporate America. Even in moments of failure or crisis, Buffett's instinct was to be transparent. He never hid from bad news. Instead, he confronted it, openly, quickly, and directly. That kind of honesty wasn't just ethical. It was strategic. It built long-term loyalty with shareholders, employees, and partners alike. Buffett showed the world that a spotless reputation isn't a PR strategy. It's a business model. 5. Build a circle of rational thinkers. Success, Buffett believed, is rarely the result of solitary genius. It is more often the product of deliberate collaboration with people who sharpen your thinking. No partnership better illustrates this than his alliance with Charlie Munger. Together, they formed a duo that redefined modern investing. Where Buffett brought rigorous discipline, Munger added philosophical depth and a love of multidisciplinary thinking. They didn't always agree, but they always made each other better. Buffett sought out people who weren't easily swayed by emotion or popular opinion. His inner circle was composed of calm, rational thinkers, individuals who prioritized understanding over reaction. This insulation from herd mentality allowed him to stay grounded while others panicked or overreached. His work environment mirrored this philosophy. While many CEOs fill their schedules with meetings and media, Buffett designed his days around thinking. He once revealed that he spends as much as 80% of his time reading and reflecting. That time wasn't idle. It was foundational. It allowed him to process information deeply, to consider decisions from multiple angles, and to make moves rooted in conviction, not impulse. The culture he fostered at Berkshire echoed this principle. Rationality wasn't just encouraged, it was expected. Buffett believed that surrounding yourself with people who challenge you to be better and who aren't afraid to disagree is one of the most underrated secrets to lasting success. In a world addicted to noise, he built a sanctuary for clear thought. 6. Internal scorecard external validation. Perhaps the most surprising element of Buffett's journey is how little he cared for the trappings of wealth. While other billionaires flaunted yachts, mansions, and media empires, Buffett continued living in the same modest Omaha home he purchased in 1958. He drove himself to work. He ate at McDonald's. To the outside world, it might have looked like eccentricity, but to Buffett it was discipline. It was a conscious choice to measure his life by an internal scorecard, not public praise. Buffett often spoke about the dangers of living by someone else's standards. He warned against the seduction of status, the constant race to impress, the quiet anxiety of comparing one's life to someone else's highlight reel. Instead, he encouraged people to define success in terms of peace, purpose, and integrity. For him, a wealthy life was one where you could wake up and feel proud of how you earned your sleep. This mindset also protected him from some of the most corrosive elements of success: entitlement, arrogance, and complacency. He never saw money as a destination. He saw it as a byproduct of doing the right thing consistently for a long time. And rather than hoarding it, he gave it away, most notably through the Giving Pledge, committing the majority of his fortune to philanthropy. Buffett didn't just build a portfolio. He built a life of focus, humility, and purpose. His commitment to his internal compass is what made his path so enduring. He didn't chase fame. He attracted respect. He didn't demand admiration. He earned it quietly. The simplicity behind the genius. Warren Buffett is often labeled a genius, but that label can be misleading. It suggests that his success was based on rare talent or inaccessible insight. In truth, Buffett's brilliance lies in his simplicity. He embraced principles that anyone could follow, but few have the patience or discipline to apply. He read voraciously. He thought deeply. He avoided emotional decisions. He partnered with trustworthy people. He stayed within his circle of competence. He didn't try to predict the future. He prepared for it. These aren't exotic strategies. They are timeless fundamentals, executed with uncommon consistency. Buffett proved that you don't need to be extraordinary to achieve extraordinary results. What you need is clarity, commitment, and the courage to ignore the crowd. He made long-term thinking not only profitable, but cool. And in doing so, he changed the way generations view wealth, not as a trophy, but as a tool. Light bulb, have you noticed how often simplicity wins in the long run? Leave a comment below sharing how a simple decision changed something in your life. And if you found this story worth your time, consider sharing it with someone who needs a reminder that integrity and patience still work. Oh, and if you're one of the many who watch our videos but aren't subscribed yet, take a second to check. It only takes a click to stay connected. The power of restraint in an age of excess. In a time when ambition is often equated with speed and disruption, Warren Buffett chose a different path, one of restraint. He didn't chase the hottest sectors or try to ride every trend. Instead, he waited, he watched, and only when he deeply understood a business did he act. To the outside world, this patience often looked like hesitation, but in reality, it was one of his greatest strengths. Buffett's career is a lesson in opportunity cost. He understood that every yes carried a hidden no. Every investment meant foregoing another. So he became a master of the strategic no. He said no to leverage when it was cheap. He said no to tech stocks during their euphoric rise in the late 1990s. He said no to complexity, to hype, to shortcuts. That discipline shielded him from catastrophic loss. When markets crashed, he had dry powder. When companies failed, he had resilient assets. In moments of chaos, he didn't panic. He deployed capital. His behavior in downturns was a mirror of his philosophy. Be greedy when others are fearful, and fearful when others are greedy. That calm hand not only built wealth, it built trust. Buffett's unique lens on capitalism. Warren Buffett's approach to capitalism was deeply principled. He believed in markets, but not in manipulation. He believed in profit, but not at the cost of fairness. His view of business wasn't adversarial. It was cooperative. He often said, "I want to buy businesses that any idiot could run, because sooner or later one will." Behind the humor was a profound respect for operational simplicity and sustainable value. He also had little interest in the spotlight. While others fought for magazine covers and red carpet interviews, Buffett kept his head down. When he spoke, it was often through his annual letters, documents now revered as masterclasses in finance and human behavior. They were rich in humility, clarity, and timeless advice. No jargon, no fluff, just lessons learned through decades of honest work. And he wasn't afraid to call out irrationality, even in himself. He reflected openly on mistakes, from buying subpar businesses to holding on to poor performers for too long. This willingness to admit error wasn't weakness. It was wisdom. It made his insights real, his leadership credible, and his lessons worth following. Philanthropy as legacy, not PR. One of the most defining acts of Warren Buffett's life wasn't made with a trade or acquisition. It was made with a pledge, a decision to give away more than 99% of his wealth. Not for applause, not for legacy branding, but because, in his words, if you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. Buffett viewed wealth as stewardship, not entitlement. He wasn't seduced by accumulation for its own sake. He believed wealth should serve a greater good. Through his contributions to the Bill and Melinda Gates Foundation and other philanthropic ventures, he redefined what it means to be a responsible capitalist. Not just to give back, but to do so thoughtfully, humbly, and with impact. His giving also set a precedent. Alongside Bill Gates, he launched the Giving Pledge, a movement urging billionaires to commit the majority of their wealth to charitable causes. This wasn't just a financial revolution. It was a cultural one. It challenged a generation of wealth holders to ask a new question. What will your wealth stand for? The quiet blueprint Buffett leaves behind. Now, as Buffett transitions from day-to-day leadership, he leaves behind more than a corporation. He leaves behind a blueprint for life. One that values time over trend, principle over flash, and wisdom over noise. He showed that you don't need to out-hustle everyone. You need to outthink them. You don't need to predict the future. You need to prepare for it. And above all, you don't need to sacrifice your values to succeed. In fact, your values may be your greatest asset. What makes Warren Buffett so unique is that he never tried to be. He never claimed to be smarter or faster than anyone else. He simply understood that success is less about what you do in a moment and more about what you do consistently over decades. He didn't just invest in businesses. He invested in patience, in trust, in integrity, and the return on those investments is incalculable. Buffett's message to the next generation. If Buffett could offer a final piece of advice to the young and ambitious, it might be this. Don't just aim to be rich, aim to be valuable. Don't just acquire knowledge, apply it with discipline. Don't just move fast, move with purpose. And most of all, don't let success change who you are. Let who you are define how you succeed. He proved that greatness doesn't need to be loud. That leadership doesn't require titles. That wealth, when built with care, can be a gift, not just to oneself, but to the world. In the end, Warren Buffett didn't just show us how to make money. He showed us how to live well. Sparkles, which of Buffett's principles do you feel most aligned with? Share your reflections in the comments. We'd love to hear your perspective. And if this story inspired you, send to a friend who values wisdom over hype. Let's keep these ideas moving forward, one thoughtful share at a time.